What's going on, folks? And welcome to another end of the day recap. We are going to be going over today's plays, the ones that I prepared last night, as well as some of the ones that I got into myself. You guys did a fantastic job today in the chat. Uh, Shout out to Danny. He killed it today. Called out a couple plays that were really great. So, let's get into it. So, all of the plays today were kind of they hit, but not in the way that we expected. Okay, and I'll show you what I mean by this. So, the first play was Amazon. This is one of the things I pointed out last night. But I didn't see that it had. I did my analysis before it gapped up pre-market. So, lesson number one, from now on, I'm going to be doing my scans pre-market. That's going to be a little bit difficult because I have to get up earlier, but it'll be more accurate because, um, you know, aftermarket and pre-market, they trade differently, and you have to take both of them into account because they can alter your entry or exit prices, and they did on these trades today. So the green circle is the entry for calls, the red circle is the green entry for puts. This is how the price traded yesterday. This is where it closed. This is aftermarket, pre-market. It closed aftermarket down, but pre-market it jumped up and then start trading up here above the entry price for calls. So for people who, I don't know if anybody gotten into this, Amazon's pretty expensive, but for future notice, if you do ever hop into a play or see a play like this where the price has gapped up above the entry pre-market, if you use pivot points, you can actually utilize pivot points to move the entry. So in other words, if it gapped up here above this pivot point, which was 23.64, you would just move this to the next level. And that's just for future reference. So, but again, this isn't really going to happen because I'm going to do the confirmation. I'm gonna get picks the night before, but I'll confirm them in the morning. So, and they'll be more accurate that way. So, because of this gap up, though, and this is also a lesson. In situations where you have a gap in pre-market, there's two things that could happen. Either the stock could come down and fill that gap like Amazon did today, which you could have made money on puts if you would have got in at the end of this 5-minute candle, because you got to get confirmation first before you go in. Or you could have entered this. Either one of these two candles could have been a great entry for puts because you see the gap, right? It's right there. So we know if price action breaks this level, it's going to gap down. Okay, because there's a lot of sell orders that didn't get filled at this level. So this would have been a perfect entry for puts. You could have made $1 gazillion if you would have bought puts on one of these candles, and you could have rolled it all the way down. And then you could see it bounced off of 200 MA. So, that's something. And this was where we were looking at it for puts. If we would have broached this level for two reasons. Number one, it's the break of this pivot point. Previous day's close is this line here, the dotted line, and 200 MA. So that's strong. Once you get down below these levels, that's a huge, it's a lot of sellers or a lot of limit orders for sells down here. So that's the Amazon trade. I hope nobody actually looked to get in at the entry points, or maybe saw what was happening pre-market, and then didn't get in. So, um, ironically, though, if you would have had diamond hands or unobtainium hands, actually, you could have made a small, tiny profit if you would have entered here and held it um, to here, but that's not um, feasible. But yeah, or you could have just bought it every time it bounced off of the 200 MA, because that's obviously, as you can see, a strong support level. So, even for tomorrow or even going forward, 200 MA, if you see Amazon near the 200 MA, it's good for calls. Um, so yeah, that's Amazon. So the next play that we called out in the chat last night was Zoom. And Zoom was the moneymaker today. Out of the calls that I put out to chat yesterday. And if you notice, right off the bat, perfect entry right there, boom, money. I mean, you could have made a lot of money with this play. We called out an entry for puts too. That didn't hit. So either way it go, because I like to do it both ways. That way you make money regardless of which direction the stock goes. So you identify an entry for calls, identify an entry for puts. Either way it go, you're going to make money, right? You double your chances to make money on every play. That's the way I like to do it. So yeah, you could have made a significant amount of money getting in here. These are 5-minute candles. Even if you look at it um, on, let me see, 60-minute time frame. So you can see it was up even for 60 minutes after the bell rung. Like this was an hour, this was an hour, and this was an hour. So you had, even if you took the first hour and said, okay, I'm just going to think about it, you could have gotten in on this candle, made your money, you know, um, took profits whenever it hit the high of the candle, or when it came back down, take profits. Um, if you got in here, you take profits here, let it run, take more profits. That's what you're supposed to do, and I'll show you a lesson about that here in a second. The last play we did was Apple, and Apple was an interesting situation. So let me show you guys what happened with Apple. Gotta change the time frame because Apple really loves to trade sideways. So essentially what happened with Apple. So this was our entry, right? About 302. I didn't believe that Apple could necessarily stay over $3 because I don't believe in SPY. I know that eventually we're going to have to get back down, and Apple is a huge SPY mover. So I just was skeptical that Apple would stay over $300, but it managed to do so. We'll see going forward, but it also respects the 200-day MA, as you can see from this chart. So we had the call entries right here, but the problem is it gapped up pre-market again, just like Amazon did, and it took away, it invalidated our entries for calls. Now, the put entries still would have been good, but the call entries, not so much. So, again, if it gaps up and gets above significantly the entry for calls, then, we take the next level up, the top of the next level up for calls. The reason why a lot of people And this is why I started using pivot points, because they helped me identify entries and exits. Because if you just see the flow of the chart, you just get in wherever you think is the lowest, but it really may not be. Pivot points represent support and resistance. As you can see, it traded in this channel all day. Inexperienced traders will buy stuff in here inside the channels. I don't buy stuff in the channel. That's a huge way to lose money. I wait for breaks of the channels. So that's where you're going to get the most likely money. And I do it um, based on the hourly chart. So I use the 5 minute candles for confirmation of the entry, but I use the hourly chart. If the hourly breaks these lines, that's what you want. The 5 minutes, because they all have their own pivot points zones. So the hourly charts, I use them because they're very accurate. I use the hourly chart pivot points to guide the trade, and I use the 5 minute candles for confirmation. So that way the trade is really accurate. And sometimes you can anticipate the breakout before it happens, but if you want to be super safe, wait for the first 5 minute candle to close above this line. If you want to be super super safe. But yeah, they gapped up, so they didn't give us a chance to get in at the predetermined entry. But funny enough, if you see, it came back down to our entry, and you could have gotten in, ironically, here down at the 200 MA and rode it all the way up. Taking profits along the way. When it hit the 50 MA, I would have taken profits, and then it came down, rejected, and then went back up. You take profits at VWAP, let it ride up to here, then you take profits here, or you could get out. You could have gotten out anywhere in here, but these are how you determine where to take profit, how to get out. You know what I mean? That's just stuff I use. Now, for the trades of the day, as we all know, yesterday I got clapped. I mean, I was in prison. Big Bubba, he got me in the showers, caught me lacking. It was a very ugly day. Today was an interesting day, and I'll show you why. But first, um, I'm going to show you some screenshots that I took of today's trades. So, this is my P&L today. $2,000, not too bad, considering what I had to go through. I went through hell today, as you can probably tell. All right, I swung some Disney puts trying to revenge trade. I was like, I didn't believe in SPY yesterday. I thought it would be a red day, so I'm like, at least I'll get some money back. Nope, got clapped again, lost another $1,000. Um, got into the Apple play shortly. It started going against me. I got out, as you can see, it gapped up. Shop was just me chasing, to be honest. Like, oh yeah, it just goes up and up and up and up, and it's got to be over with, right? Like this whole shop thing can't last forever. So I got into some shop shorts and I got clapped. Um, Spy. This is interesting because the reason why you see this loss of 937 is because this was a swing from yesterday. So I swung Disney and Spy puts, right? Got clapped on both of them, was down over $1,000 on both of them. But fortunately, I re-entered Spy puts when I called it out in the chat earlier. A lot of you may remember that I called, I said that Spy would hit like 290 something, and then 280. I think it was 280, 90 something, whatever, and reverse, and it did. And I bought right at the tippy top puts, and here we are with that. I swung them because I think that Spy will probably fall tomorrow. It doesn't have to fall much, but from what I saw today, it's weak because the momentum can't continue because the next stop. I was doing some analysis on the charts, and I think the next stop is like 290 something. That's not really feasible as far as the pivot points are concerned, especially where we are. But I'm not going to rule it out only because we're starting to get some uh, uh, information about openings and things are like it's the economy is moving very rapidly towards reopening, and once we get data like that, the market will take it good. I really didn't want this to be a V-shaped recovery. Maybe it will be, maybe it won't. I don't know. We'll see. But yeah, Stamp. That was just me trying to ride the wave. Got clapped. I did swing knees. They were down after the market, so I'm probably gonna get clapped with these in the morning. Trello, I saw that play pretty late. But it was the play that saved the day, but it was almost the play that bankrupted me. So, like I told you, I saw it late, and we'll talk about that here in a sec. Uber, shout out, okay, to Dan because Danny hooked us up bigly. Damn, Daniel, my man. Yes, the Uber play. We did. I ain't gonna lie though. We did get clapped a little bit right after the closing bell, and I thought it was over. But Uber Eats saved the day, so we may be in the building tomorrow at open. We'll see. Diamond hands. All right, and Zoom, the last play, you saw how that worked out. I actually got in it late because was concerned with all the clappage that was going on with Disney and Spy. I had to close all that out, see where it was going. So I didn't even get a chance to get in Zoom on time. If I did, I probably could have made another 1,500 to $2,000 if I did. But that's neither here nor there. Whatever. So now, when we say diamond hands or animanium hands or obtanium hands or vibranium hands, whatever type of hands you want to talk about, today was a challenge for me, and this is why. As soon as I got into Trello, it didn't always look like this. About 5 minutes into the position, this is what it looked like. Okay? Now you can see I took this position at 10:52. Well, that's when I took the screenshot, but it was pretty close to that time in the morning. Like I said, I came to it late. It had already gone up. It was around $39, $40 at the time. And I'm like, yeah, it's just going to go to the freaking moon. There's a bunch of call flow. Nope. Got clapped. And I went in very bigly, as you can see. Again, sort of trying to, but I did look at the chart. I did plot entries, and I was like, okay, this is a good entry. But the trade quickly turned against me. So I'm like, at this point, do I cut? Do I hold it? I mean, what do I do? I'm like, okay, if I cut, okay, I said yesterday when I cut Disney and I lost $9,000 on that, and I didn't wait for it to come back. And if I would have waited to come back, I could have regained most of my losses. So I said, you know what? Diamond hands. I mean, this was diamond hands to the max, okay? Then, next slide. 11:29 a.m. $8,217. And I had to look at this on my screen, okay? I want you guys to know what trading actually is. Because people see this and they're like, oh my God, it's so great and awesome and making money and oh yeah. No, bro. No. This is what it looks like most of the day before you get these type of screenshots, okay? So I just want people to know what goes on behind the scenes. It's not all sun and roses. It's not, okay? This is a clappage all day and tomorrow and twice on Sunday. If I would have sold out of this position at this point, I think we can all agree I would have been clapped. Tremendous. I would have been done. Like I would have had to go back to buying, 2, 3, 4 contracts. It would have been over. But diamond hands dipped in unobtainium, dipped in, vibranium, dipped in adamantium hands. Okay. And then 1243. What do you know? She starts coming around, baby. So you go from an $8,000 loss to a $400 gain, right? Look at that. Okay. And then 1256, she's coming around, boom, I'm in the building. So I'm not stupid. At certain points, I take profit. As you see, at 1256, I had 10 contracts. It was more than that previously, but I sold them off, and at this point, I only had 10 contracts. At each level, I'm taking more and more profit. Now I only have 5 contracts. So boom, that's how you work it. And then, that was it. And then here we are, right now. So everything I swung was all profit. So even if Trello goes to 0 tomorrow, I'm just going to lose $448, but I still have $4,000 in my pocket. That's how you trade. I learned from the mistakes I made yesterday, and I didn't make them today. And because of that, I have a gain on the day instead of a loss, despite the fact that my swings from yesterday clapped the shit out of me. And I still was able to make enough money to cover my losses from the previous day. Well, not the losses, but the swings from the previous day, I should say. So, moral of the story, you got to know, I'm not saying have diamond hands in every scenario, because obviously it's not good to have diamond hands in every scenario, because sometimes you could say diamond hands and then actually get seriously clapped, and you don't want that. So, know when to have diamond hands, know when to cut. And this is why the importance of stop losses. See, you learn something every day. Stop loss, stop loss, stop loss, stop loss. I keep telling myself stop loss, but because I'm live trading, I don't feel like I need one. But then you get caught up in situations like this, and then you have to be forced to hold it, and it's not a good feeling. So stop losses, stop losses, stop losses. Did I mention stop losses? Okay, I think I did, right? All right, so that's it for tonight. I'm going to post some more plays in the chat. I got to get on the call with you guys shortly. I did start a YouTube channel and an Instagram page. I'm going to put the links, post the links in chat tonight. All right, guys, we'll get out the plays to you, and we'll see you next time on Trading Ball.
As you can see, SPY is trading at a crucial level, and it keeps coming up to halfway to R1 and dropping back down. But does it have enough momentum to continue above R1? Find out next time on an exciting episode of Trading Bull Z.